Hello and welcome everyone to this edition of the Research Roundup from Fidelity Digital Assets. For those of you who might be new here, the Research Roundup is a monthly video series where we break down the latest data, insights, and research that we're working on and bring it to you for a forward-looking view of the digital asset market. So today we're going to talk about the recent price action. Normally we open up with that. We'll talk about some of the latest news and analysis and how it might shape the industry going forward. I'll touch a little bit on the current macro condition, especially how it pertains to digital assets. And then we've got Daniel Gray here with us, who is finishing up our signals report. This is a quarterly report where we dive into on-chain metrics. So we're going to get a little bit of a preview from Daniel on that report that's going to be out next week. All right, so let's start with the price action. Bitcoin and Ether returns compared. So this is a year-to-date chart. Again, a bit of the same story as last month, where we had the strong outperformance at the beginning of the year, and we've since traded sideways to now slightly down. The only change I would say is that we've seen relative underperformance of Ether versus Bitcoin recently. If you look at the the Ether price divided by the Bitcoin price, so that ratio, we are now below 0.06. That was kind of a key level that I know a lot of traders and other people were looking at. And so we'll keep an eye on what might be driving this, and maybe we'll get a little insight from Daniel as well later in the show. So moving on to the price action. So I would summarize the price action recently as a bit of a crossroads. We like to use the simple moving average metrics when we look at this. Again, this is past performance. It's not indicative of future performance, but it is a key level that a lot of people look at for some potential support or resistance. And so we have dipped below some of these moving averages, which might mean a near-term negative outlook. But if you take a wider view, we're still well above the Bitcoin realized price. The realized price is kind of an average cost basis for the entire network, where you look at the price at where each coin moved individually, or a fraction of a coin. And so that's why you can kind of think of it as an all-in cost basis. Still well above that, but if you are looking for kind of the ultimate support or downside, it would be here at about 20,000 or just above. All right, so let's turn now to a few news stories that we got over the last month here. Number one, we did get Ether futures ETFs. They did launch on October 2. And they launched maybe with a bit of a whimper rather than a bang, especially compared to the Bitcoin futures ETF that launched a couple years ago. Looking at the numbers here, we got a little over $2 million, or a little under $2 million a day in trading volume for all of these products combined. That's about average for a new ETF, but when you compare it to the first Bitcoin futures ETF that launched a couple years ago, they did $200 million just in the first 15 minutes. And about $1 billion on day one, which was right up there with some of the record-setting ETF launches in all of ETF history. So, of course, the question is, why the difference? And the biggest thing to point out is the Bitcoin futures ETFs were launched at the height of the bull market, when we were at trading near all-time highs with Bitcoin. And now, of course, we're still in a pretty big bear market, down 65% from those highs. So that's obviously number one. And then number two is these are Ether futures ETFs, not Bitcoin. So depending on how much you want to read into that of the appetite for Ether versus Bitcoin, although of course it's hard to say just because they're completely different environments. The other thing we got was more delayed decisions from some of the applications for a spot Bitcoin ETF. So again, we have futures ETFs, we've got futures Ether ETFs now. We still don't have a spot ETF for Bitcoin or Ether. And of course, we got a few more delays there. So just something to note for those of you who are looking ahead as a potential catalyst for some of these approvals. And then we also got Mt. Gox saying they can delay repayment for the deadline for another year. So a judge granted them this. Mt. Gox was this defunct exchange that was very popular at the very early beginnings of Bitcoin trading. Mt. Gox has 142,000 Bitcoin to distribute to creditors. So, of course, a lot of people have been watching this deadline thinking, could this impact the market if some of these come on the market to sell, or people wanting to liquidate them who've been holding onto these claims a long time? Of 142,000 Bitcoin, $3.7 billion, that is a lot, but I don't think it would make a huge impact to the market. But in any case, we do have a delay for another year. They were supposed to start distributing those claims by the end of this month, October of 2023. They now have until October of 2024, but they might start to do some earlier. This is just the latest deadline that they must complete them by. And then in the same vein, some people have been looking at the FTX assets, another exchange that went bankrupt, and wondering when they're going to start liquidating or selling some of their assets. And so we did get approval from a judge this past month saying FTX can start selling $100 million worth of assets per week. They have claimed they have $3.4 billion in assets. Looking at the numbers here, most of that is in Solana, $1.16 billion. $560 million in Bitcoin and $192 million in Ether. I'm not as familiar with the Solana market, so I'm not sure how that might affect some of the trading or price impact there. But 560 million in Bitcoin and 192 million in Ether is certainly small change compared to what is traded daily. So probably not a huge impact there as well. All right, let me take one note on macro here before we turn over to Daniel. This is just a note that real rates keep going up. Interest rates, of course, are screaming higher, the 10-year screaming higher most recently, especially. And this is one of my favorite charts. It looks at the Bitcoin price on a log scale. That's the left-hand side. And then you've got forward real rates on the right-hand side. Note that it's an inverted scale. So 2019 through all of 2021, even up to 2022, we had real rates going lower. And then they even went negative, right? And so, of course, that made Bitcoin on a relative basis look very attractive. It doesn't pay a dividend, doesn't pay yield, but at least you're not getting a negative rate on it, right? You've got a scarce asset that you can hold on to. Now, recently, though, real rates have moved higher. So you would think that this would make Bitcoin look less attractive. And we did see that all through 2022, the price of Bitcoin come down along with real rates going up. But more recently, Bitcoin has actually been holding up. And quite frankly, I'm surprised by this. I would have thought it would have tracked. But of course, the past is no indicative of the future. So the big question going forward is, does this catch up? Does the correlation return? And Bitcoin needs to come down to match those real rates going up. Or is Bitcoin sniffing something out that these forward real rates are not? And one potential idea here could be Bitcoin is sniffing out the other picture of macro that we're looking at, which is these massive structural fiscal deficits that we're running. And so maybe Bitcoin is even more forward looking than these real rates, and that it's looking at this and saying, we're going to need more liquidity, we're going to need more easing in the future to accommodate this. So obviously, don't know which way it's going to go, but something to be aware of, and one of our favorite charts that we'll be continuing to monitor. All right, Daniel, let's turn to you. So you've been working on our latest signals report, the Q3 report. This is the report where we dive into the on-chain metrics for both Bitcoin and Ether or Ethereum. And we kind of give people a rating of where we assess things and what we're watching. So that report should be out next week. But since you've been in the data, why don't you take us through a few charts of some of the most interesting things you've seen, starting with the Bitcoin side here.
Yeah, sure. So to start off, we have Bitcoin's monthly metrics, which have seemed to repair their relationship with each other, and they're moving together once again. And so in case you're unfamiliar with what I'm referencing here, if you notice early in 2023, there's a peak of transaction count, and the opposite occurs in both active addresses and new addresses. And so this aligned with the release of the ordinals and BRC20. And so many people weren't creating new addresses, and the fees got super high, about like $20 per transaction, which caused people to stop sending transactions. And so today we're seeing a rise in all three of these metrics, which shows an expansion of on-chain use. And then something else important I think is worth mentioning is the peak in transaction count, where I mentioned the $20 fee. Today's transaction count is only 7% lower than that peak. And today's, I think, high priority transaction count is about 16 sats, or maybe 60 cents. So the congestion that we saw is relatively the same now, but we don't have that same kind of fee, which is super interesting because we're scaling without higher fees.
Yeah, that's really interesting and nice to see, right? We're seeing kind of health of the market and people transacting, but we're not seeing the kind of negative side effect that has usually come along with that.
Yeah, so if you're doing a UTXO management, now's the time, I think, to start consolidating your UTXOs.
Yeah, that's good advice for people who want that granular control. UTXOs are the unspent transaction outputs, which is how the Bitcoin network works. And so you can have a lot of them if you do a lot of transactions, and it can make it more expensive because it's not per Bitcoin or dollar amount. It's the fee is charged by the amount of data, right? So the more of these you have, the more you're filling up the block with data.
Yep. And so next we have exchange balances. And so charting from this this peak in 2020 of just over 3 million Bitcoin on exchanges, this balance has fallen roughly 29% to today's balance. And the last time it was this low was 5.5 years ago. And of course, you can see in the middle here, the balance was on the way up. So we haven't seen this downward trend in a long time, or ever, I guess I could say.
Yeah, this chart is fascinating to me because it's actual number of Bitcoin, not a dollar amount. So it's not being influenced by the change in price. And so you're seeing these coins come off of exchanges, and we get this data because we know a lot of the wallets that exchanges use, correct?
Right.
Right. So it makes sense to me that given all the latest things happening with exchanges and concerns, you've got more people pulling their coins off. That's maybe speculation, of course, but it seems to make sense. All we do know is the data, the why behind it could be a question. But you combine this with the upcoming halving, which we've talked about before on this and in our research. And also we've talked about the percentage of illiquid coins that haven't moved in more than a year. And you've got kind of all these conditions stacking up for potentially a very tight supply with coming within the next year or even 6 months, I'd say.
Yeah, I think people may be looking for that positive catalyst, which happens to align with the halving coming up in April. So that'll be something we'll be watching going forward.
Absolutely.
If we switch gears here to Ethereum's monthly metrics, they were either flat or down this quarter. Nothing too exciting happening in this bear market to drive transaction count or adoption. And with that in mind, transactions, they cause the fees to go up, which causes burn to outcompete issuance. And so in our next chart here, we can see this on full display. So the past few days or weeks even have been inflationary for the daily net supply. And so that's charted here in red. And that's simply when that fee rate is lower than issuance. And so while it's common for swings to occur from inflationary to deflationary and back again, the interesting piece to note here is the relationship between these layer one transactions and fees and the supply change. So meaning if the total fees aren't high enough to compete with that issuance, we're going to see an inflationary period. And the long-term trend is really what we're trying to watch here. It's not these day-to-day, but I think it's important to just note what is happening day-to-day so that we can see if anything is changing maybe before the trend totally changes.
Yeah, and this gets back to what I alluded to earlier, looking at the price of Ether versus Bitcoin being a relative underperformer. The price of Bitcoin the price of Ether in terms of Bitcoin fell below that 0.06 level that had been trending at for a while. And so to me, this makes sense, right? People are pulling back in the number of transactions. We're getting a bit of an inflationary supply here. So the price going down with it also makes sense. And bear markets are for builders. We're seeing tons of technical building and really interesting things on this ecosystem, but it hasn't been accompanied by the users and the transactions also going up yet.
Yeah, and we can add a bit of nuance there. In this next slide, we have layer one transactions versus layer two transactions. And so we can actually see the layer two transactions have picked up since the beginning of the year. And these layer two transactions give up some decentralization and censorship resistance to experience smaller fees. And so speaking to that fee rate and that transaction rate, layer two transactions haven't been high enough to maintain the burn rate needed to compete with the issuance. But I think it's important to note that I think this is a positive in the short term to see this layer 2 transaction count rising, because it shows that users haven't moved on from an Ethereum altogether, but they're following the incentives, right? And so they want to see these lower fees. And if layer 2 protocols can accumulate enough users, then they can maintain that low fee rate and still compete with issuance, because there will be so many transactions happening.
Yeah, absolutely. And that dovetails really well into one of the pieces we just released, our analyst Max Waddington, the one on the right there, Bitcoin and Ethereum fees explained. Scan the QR code or go to our website, fidelitydigitalassets.com/research and insights that you can see at the bottom there. But this fees play piece gets at the heart of what you're talking about. It explains how fees work on the Bitcoin network versus the Ethereum network. And then it goes through an analysis of what they're correlated with, right? And then he puts a little forward spin on this as well, saying, okay, what could we see in the future? And it gets to what you were just talking about, Daniel. Do we see more L2s that drive fees lower and therefore could increase adoption, but at the expense of taking away some of the activity at the base layer? And whether or not that's good or bad. And so he kind of presents a bull case and a bear case for both of these things. So really advise people to check that piece out if that's something you're interested in. And then we also refreshed our classic piece, Bitcoin First. So a little bit of a rebrand here, as well as some update to the data, but this has been one of our most popular pieces. So if you haven't read it yet, definitely read it now. If you read it a long time ago, always worth a reread as well. And then just to give a little forward look here, Daniel, we've got that signals report coming out, so be on the lookout for that next week as well. So I think that does it for us this month. Thank you again so much for tuning in. We'll see you again next month for the research roundup. And be sure to go to fidelitydigitalassets.com, click on the research to see all of our latest research there. Thank you.